good morning and welcome to Business Morning. It's a new trading day and a new trading week. And once again, we're keeping our eyes firmly on the forces shaping Nigeria's economy and the global markets. This morning, we'll be breaking down the latest economic signals, from fresh forecasts on Nigeria's growth outlook to key policy debates around tax reforms and what they mean for businesses and investors. We'll also track developments in the markets, commodities, and currencies, and ask the big question: where are the real opportunities and risk in these days ahead? Glad to have you join us. Let's get started now. See, oil prices, they dipped today as Tehran's claim of total control, that's over the weekend unrest, eased some supply fears from OPEC producers, while investors also wait signs that Venezuela may soon resume crude exports. And we see the impacts there on Brent crude. Just about 9 cents down, $63.25 a barrel. Did see that big rise on Friday last week. US WTI, $59.02 a barrel. And we're seeing, weighing efforts to resume Venezuela exports there, driving sentiment. Then we see for weekly performance, that's a gain of about 3%. That's the biggest rise since October. Brent, WTI, and we see the context there. Iran's protests, escalating, and a crackdown increase there, driving sentiment right there in the oil market. So that's how we're kicking off this week. Trading oil, we're starting off down. We'll see if there's some kind of rebound later on. Let's get a check now on what's played out with the equities market. Yeah, we're tracking all markets at this point. And we see Nigeria's equities market sustained its bullish run in the second trading week of 2026 as renewed investor confidence pushed market capitalization. No, that was actually the first trading week. 162,000, 3.71%. That's the gain, total gain for the whole of last week, lifting total market value to 103.78 trillion, taking the year-to-date returns 4.43%. I guess we're matching 2025 at this point. Despite mixed trading activity right there, we see volume 4.16 billion, lower compared to the previous week. Value 94 billion naira, lower than the previous week also. But we see deals, bigger deals, 248,254. Let's get a check now on sectoral performance for the week. We see the leader for last week, that's the insurance counter, a big 6.82% advance, followed by industrial goods, 4.74%, oil and gas, 4.70%. We're seeing oil and gas there waking up. That's the oil and gas counter. Then we see banking coming in at 3.07%, and consumer goods, 2.76%. Consumer goods, this one shine in 2025. The biggest gainer there for most of the sectors that we track right there on the NGX. And we see top gainers, Multiverse Mining and Exploration PLC, closing at 23 naira 40 kobo. A big 59.73% jump there. Make the calls PLC, 53.20% rise. And we see M.A.N. Baker, Nigeria PLC. I've noticed the pharmaceutical companies there gaining most of last week, and maybe there's something there at this point. Then we see Alex. This one's had quite the run. We see a big pullback for the week, 19.75%. Austin Lars Company PLC, 11.56%. So these are leading the laggards right there for the trading week last week. But now, let's review Nigeria's fixed income market, from last week and get an outlook for what to expect this week. That's the picture right there for the fixed income market. Joining me now, we have Chuka Nwachuku, Chief Dealer, Group Head, Trading, UBA. Good morning, sir. Great to have you on the show.
Good morning, Larry.
So talk to me about the numbers we're seeing in the fixed income market now. What is the unusually high subscription? 2.73 trillion naira at the first OMO auction of 2026. What's that telling us about, investor confidence and liquidity conditions in Nigeria's financial markets?
Thank you, Larry. You mentioned, like you rightly mentioned, unusual, is that the right word now, of the high subscription. There are two things, that necessitated this. One is that the government obviously is looking to borrow quite a lot of money this financial year, and then well over 15 trillion has been, targeted to be borrowed from the local market. And secondly, The government is also, through the DMO, is looking to, through CBN is looking to, to continue to mop up excess liquidity in the system. And so that's why you see that the longer ends had more volume allocated to it than the shorter end. So for investors' confidence, it just shows how, how lucrative our market is. Don't forget that some of the youths, in our market, the youth in our market currently, in Nigerian market, is quite high and very attractive compared to, other emerging markets. And so the investor confidence is there. And then another factor is the high level of liquidity in the system. So most of these matured securities need to be reinvested by the investors. So we found out that this month alone, well over 5 trillion will come into the market in a way of maturity, OMO maturity, NTB maturity, as well as a coupon payment, and then maturity, bond maturity of 2026. And so over 5 trillion, and then we've not added FAC. So all these factors, necessitated, the high volume. And then, of course, most importantly, the fact that the government is looking to borrow. And then, of course, you see that from the figures that was offered and then sold as well.
So, given that, demand was particularly skewed towards, longer dated OMO bills, like the 210-day, what implications does this have for, short-term money market rates, yields, and the CBN's monetary policy outlook, for the coming months?
I don't think there's much implication. The yield itself is attractive. So I think that what most investors, are looking to do is that, everybody want to play on the shorter end, considering the factors I've just mentioned, meaning that, we expect the yield to greatly elevate, just for the sake of the fact that government is looking to borrow. And so if government wants to encourage more participation in the security market and raise fund, much needed fund that is needed for infrastructure development, they've got to make the youth attractive. So different players play in different fields. So some investors, will prefer to do on the shorter end. I think the reason why is the fact that because we expect this yield to go up, no investors don't want to lock in or traders now don't want to lock in, in the longer end. They just want to, to play within the shorter end, so that when the yield goes up, they're able to buy a more attractive yield. So for me, I think that the DMO, just as their mandate required, is trying to borrow for government as low as possible. We can see that our debt servicing is governing well over 80% or 90% of our revenue. So it pays the government more, to get this, funding or borrowing as cheap as they can.
The Naira's performance, that's for the that's the FX market. We see a big gain for the week. Last week, 1.1%, 1,418 Naira to the dollar. We also see the gross reserves, a big $36.32 million rise there, taking it to 45.64. That's for the gross FX reserves. Talk to me about, what drove sentiments right there in the FX market last week.
Well, throughout last year, you see that one of the greatest gain from the CBN policy is the stability of the Naira exchange rate, as it were. So the Naira traded, within the range of 1437 to 1465 levels throughout last week. And that is because, though the demands are there, but CBN has continued to intervene. And now you mentioned about the reserve, which stood around above $37 billion. These are factors which it helps the federal, it helps the CBN, in order to support the Naira. So the inflows are coming in. The OMO fuel, for example, that was issued. Part of what OMO is used for, apart from mopping up excess liquidity, is also used it to attract FPIs, the portfolio managers. And so that's why you see that rates are always higher than that of NTB, just so to attract foreign investors. And so for the Naira, Naira had been stable for the past 7 months. Within now and end of the month, we still see within this range. However, I do not think that Naira will continue to be this stable going into the second quarter or third quarter. I think that there might be some bit of a depreciation, along the line, but I don't think it will be as bad as what it was before down.
All right, thank you so much. Definitely be looking out for, what's going to play out in the fixed income market and the FX market this week. Mr. Chukan Wachiku, Chief Dealer, Group Head Trading, UBA. Thank you for coming on this morning.
Thank you, darling. Thank you.
Well, let's look at other matters now. One of the world's leading professional services firms, KPMG, raised, red flags over Nigeria's newly gazetted tax laws, warning that the framework contains critical errors and gaps and inconsistencies that could create uncertainty for businesses and taxpayers. In a detailed review, the firm says some provisions of the new laws may complicate compliance, distort tax planning, and even discourage investment. Barely weeks after the reforms came into effect, the concerns are already sparking debate about the quality of the legal drafting and the possible implications for government revenue and the wider economy. Meanwhile, the Presidential Fiscal Policy and Tax Reforms Committee reacted to the concerns raised by KPMG over the new tax law, while acknowledging the few concerns raised by KPMG, particularly in the area of implementation risk and cross-referencing issues for foreign-controlled companies in Nigeria. The committee classified a significant portion of the financial services view on the new policy as invalid conclusions. RC Wema Bank, Nigeria's that's the most innovative bank and pioneer of Africa's first fully digital bank, Alat, has announced the launch of the upgraded version of its flagship digital banking platform, Alat by Wema. Designed as the next phase in digital banking, the upgrade delivers a smarter, faster, and more intuitive experience, reinforcing the bank's leadership in technology-driven financial services. Tagged Alat, the evolution, the upgraded platforms represent a major advancement in how customers interact with their bank. It introduces intelligent features such as voice banking, known as SOAR, which allows customers to carry out banking activities using natural voice commands, improving accessibility and reducing friction. The platform also features tap and pay for quick and secure contactless transactions, as well as uptime prediction that enhances transparency, reliability, and confidence around service availability. Together, these innovations are designed to simplify everyday banking while anticipating customer needs in real time. Since its launch in 2017, Alat has transformed how Nigerians experience digital banking. With the upgraded version of Alat, Wema Bank continues to strengthen its position as a digital-first institution, delivering innovative solutions that empower individuals and businesses to bank with confidence in an increasingly digital economy. And to other matters now, we see the Federal Capital Territory Minister, Nyesom Wike, has officially commissioned the new corporate headquarters of Geoli Global Resources Limited in Port Harcourt, describing the state-of-the-art facility as a showcase of Nigeria's indigenous capacity and private sector growth. Located in the Neka Obiakpo local government area, the ultra-modern complex was unveiled in a ceremony attended by top government officials, business leaders, and stakeholders in oil and gas and environmental remediation sectors. Among those present were serving and former political figures, including Senator Barry Mpigi and Orwell Onyeso, alongside captains of industry and community leaders. Our correspondent, Deborah Mie-Febere-Sime, was at the launch and now reports.
The commissioning of Geoli Global Resources Limited corporate headquarters marks a major milestone in the company's over 2 decades of operations in Nigeria's oil and gas industry. The multi-story complex houses state-of-art petroleum, environmental toxicology, microbiology, wet chemistry, and gas chromatography laboratories, alongside office spaces, training facilities, medical and recreational units. The Managing Director and Chief Executive Officer, M.A.N, in his welcome remarks, says the facility was built entirely from internally generated funds with no loans or outstanding debts, reflecting sustainable growth and strong corporate governance.
Our track record and indeed what you are witnessing today is clear evidence that we conduct our business with dedication, discipline, strategy and skill, deep industrial knowledge, and the fear of God. Those qualities have brought us to this moment. As we formally opened the corporate headquarters of what is today one of the biggest environmental companies in Nigeria, Africa, and one of the best in the world, located here in Rivers State.
Speaking before proceeding to cut the tape, the FCT Minister Nyesom Wike, who is the special guest of honor at the event, describes the Jolly corporate headquarters as a massive world-class investment that meets international standards, saying he was impressed by its scale and quality. While commending the management, the minister stresses that investors who commit resources to such large projects deserve strong government support.
We commissioned the corporate headquarters of Jelly Global Resources for the use of our people. And I'm praying that God Almighty will continue to guide the managing director, and this company will be a success story for everyone. In the name of God the Father, God the Son, and God the Holy Spirit.
Next is a tour of the facility by dignitaries led by the Managing Director, Chief Executive Officer of the company. In a chat with Channels Television, the MD CEO M.A.N says the company is positioning itself for global expansion with plans to establish branches in first world countries to further strengthen its international presence and competitiveness. He adds that Jolly currently manages multiple remediation sites across the Niger Delta, employs hundreds of staff in Rivers State, and remains committed to community development, youth empowerment, and environmental sustainability.
Excellence is our watchword. Quality, standard, and I always tell people, no organization can grow more than the leader. The growth you saw here is an evidence of what I represent. Moving from here to another edifice, either in London, America, or Canada.
We also spoke with guests who described Jolly as a brand that matches international standards in service delivery and technical expertise.
Oil and gas business is centered in Rivers State, and this laboratory is open here.
We are proud of him. We are happy to identify with him.
The company says the new headquarters will further enhance its capacity to deliver high-level environmental and oil and gas services within and outside Nigeria. Deborah Miefe-Beresima, Channels Television News.
And now to our first conversation. Well, we're diving into Nigeria's economic outlook for 2026, exploring growth prospects, fiscal sustainability, monetary policy, and emerging risk. Recent projections highlight a GDP growth of about 4.3%, yet growth remains uneven, concentrated in finance and ICT, while sectors like agriculture, manufacturing lag behind. At the same time, the fiscal landscape shows a 23.85 trillion deficit, with debt servicing consuming nearly half of federal revenue, raising questions about sustainable public spending. Joining me to unpack this, we have Kolawole Odunlami, is Associate Director, PwC Nigeria. But we'll take a quick break. When we come back, we'll unpack all of this. Just stay with us. All right, time to bring out the crystal balls now. And we have Kolawole Odunlami, the Associate Director, PwC Nigeria. Great to have you.
Thank you, Ladi.
Good morning. Happy New Year. Happy New Week. Happy New Day. And all of that.
Yeah.
Today we're going to be looking at your crystal balls, the PwC, what you're expecting for Nigeria's economy so far. Then I've looked at the report, and I see you're projecting a GDP growth rate of 4.3%. For 2026 from 3.98% in Q3, 2025. But there's also that talk about, growth being uneven, at this point, even though we're seeing what the numbers are saying.
Yeah.
When you look at, the real economy, you look at the state of Nigerians, it looks really, uneven. So what do you think is the way forward here? We're expecting growth, but how do we make it, even, when it comes to, the inequality and the gap, between the rich and the poor?
Yeah, Ladi, thank you very much for having me once again. I think, interestingly, the past 3 years, as we all know, have been largely years of economic reset and reform for Nigeria. And we expect that 2026 would be more of a year focused on inclusive growth. And inclusive growth, like you've mentioned, would be, more even growth across sectors. Now, we are sectorally diverse as an economy, so there are many sectors now that contribute to the economy, but we need to be more productively diverse. So we need more sectors that can grow, more sectors that would add more to the economy, more sectors that would create more jobs, and all. Growth has largely been driven by the service sectors, financial services, ICT. Gradually, we're expecting this year the energy sector to play a very critical role in the growth of the economy. But in terms of inclusion, a lot has to be done in terms of government policies, the consistency in the execution of the fiscal reforms, consistency in the execution of the monetary policy reforms. While the monetary tightening stance of the CBN has been very essential in stabling or making the ship more stable in terms of inflation, foreign exchange, we expect that in 2026, a little more easing, which the CBN has also sort of alluded to, will help in terms of access to credit, would also help even in terms of our overall capital formation for the economy.
Right, and you did mention the services sector leading there, but the structural constraints are still there. High energy costs and logistics bottlenecks. Talk to me about having these sectors lead, but at the same time adding to the employment numbers, getting more people engaged. Even though we're talking about these sectors, the services sector leading, how can we get that sector to employ more people?
Well, I think first of all, we must come to terms with reality of the global AI revolution and what that, of course, is going to do in terms of productivity. While to enhance productivity, many fears have been around what it will lead to in terms of job losses. Our philosophy as PwC is that the digital transformation from now going forward is going to be human-led and tech-enabled, which means that we do not necessarily think that technology would totally replace humans. It will only enhance the productivity of humans, right? So we don't see technology outrightly replacing people. It may replace those who don't know how to leverage technology. I said this because, of course, the service sector would consider a lot more efficiency. Players in the sector want to cut costs, right? They want to leverage technology, to help them deliver faster, cheaper services. For example, even the financial services sector, the evolution of the fintechs, and even the banks themselves leveraging technology all the more. So we believe that employing more people has to be, the skills gap in the country has to be covered, right? More people becoming more tech savvy, more people who have the right capabilities to serve. So it's not just a matter of job creation, it's also a matter of covering the skills gap. But beyond the service sector, right, and of course, even the service sector, back to that, as the banks continue on their recapitalization drive, you expect that to drive economic growth. But also, we're seeing the energy sector in 2026 is going to play a very critical role. We saw a number of the last-minute deals in December, right? And you can expect that...
It was like an exit and an entry.
Exit and entry, exactly. Exactly. And what you can expect in 2026 going forward is that just like we have the big five, the full gas in the financial services sector, Going forward, we should be expecting to have the big five in the energy sector from a capital market standpoint. We currently have Aradel, Seplat, Geregu, but some of our biggest companies are not listed, right? M.A.N has listed now, but NNPC is not listed. Dangote not listed yet. Both are planning to list.
That's the Dangote refinery.
The Dangote refinery,
right.
Exactly. And NLNG is not listed and may or may not list. But by the time you bring in Dangote refinery to the stock market, by the time you bring in NNPC possibly to the stock market, you're going to have 5 big energy stocks, right, which would drive the stock market. I mean, Dangote refinery is about $20–30 billion, right? That is about 40% of the current market capitalization. Of course, we don't expect him to list or maybe list, I don't know, certain percentages, right? But we expect growth in the capital market to come from that also. And of course, like I said, energy sector, the agri sector, still challenged by some of the bottleneck issues, which were resolved, but towards the latter part of the year, we faced some of those challenges around security, challenges around transportation and all. But if those challenges are resolved, we can expect the agri sector also to drive growth. We expect the real estate sector to continue to drive growth. Construction, like you know, is a time-tested job creation machine. And so as the government spends more on capital projects, the ripple effects of, direct jobs, indirect jobs, some of those corridors where those projects are being implemented are going to open up. Real estate value in those corridors, would increase significantly, ease of transportation for products and all. Also, on the side of the monetary, right, again, while the 27% has helped, MPR has helped with, handling inflation, we expect a bit more easing, which will also help credit access in 2026.
Yeah, we'll see how many basis points you get cut.
Yeah.
Hopefully it's a cut, in 2026. We only had one in 2025 from the MPC. Let's look at fiscal sustainability now and debt. The government, spending plan for 2026, we're seeing a big deficit there, about 23 trillion naira. Debt servicing, that's supposed to go up by half of government revenue in 2026. So doesn't look pretty at this point. So talk to me about how to balance all of this. You're trying to balance debt servicing, you're still trying to pay back, some of the debt, but at the same time, there's so much to spend on. Something is going to suffer if we can't get, enough revenue.
Yes, like you rightly mentioned, the fiscal pressures may persist in 2026. Debt to GDP 4.28 projected, about 41%, I beg your pardon, debt to income, deficit of budget in 2026. Essentially, the government needs to spend to grow the economy, right? And a lot has to be done in terms of revenue optimization going forward. We expect that the tax reforms will yield some results going forward in 2026. Of course, like every reform and every policy, you don't expect impact immediately or instantaneously. So the impact, the compliance will probably take maybe a few years, right? But a lot still has to be done on the fiscal side for sustainability. That is actually one of the risks for 2026.
At what point does debt servicing become unsustainable for this government?
Well, the sustainability of debt servicing is not just for a certain government, right? Generally, right, if 40% of your income is going to service debt, right, that has reduced, but it's also still concerning. And so there are two ways to it, really. Optimize your revenue, grow your revenue, right, significantly. But in fairness, debt to GDP-wise, we're not doing badly at 4.28%. Could be a lot more better, right? Could be brought down.
But debt servicing to revenue
debt servicing to revenue ratio of 40%, right? A lot still has to be done on the side of revenue optimization. But we must begin to see that, look, a lot of revenue comes from, the energy sector, largely, which is very susceptible to external shocks, right? And with the global dynamics in 2026 that we're seeing, the world is closer to a Russia-Ukraine deal, right? I say closer because, as you may have followed, a lot of conversations are going on. There's a draft deals are being discussed. Now, that has implication for oil revenue, because that could possibly mean that more Russian volumes will be allowed into the market. There will be a supply glut, right? Venezuela also, if Venezuela volumes are unlocked and released into markets, there will be a supply shock, which may affect prices below even the $55 a barrel projection, right? And so as a country, first of all, while the price we may lose in terms of prices, right, we need to optimize production, right? And so we expect the marginal bid field rounds to do a bit in unlocking more volumes. The Ogoni conversations should unlock more volumes to us. The 3 million barrels per day target of 2030 is quite a huge one, but very plausible, right? And then we also expect that we need to think beyond oil on the revenue side.
Because I was just thinking in my head, well, it seems Nigeria, we are concentrating more on oil at this point. And looking at 2025, we've seen countries like Ghana, profit from the gold surge, the surge in the metals market. We're seeing other countries in Africa also profit from, copper, at this point because of the EV story. But we're still looking at oil. We're still concentrating on oil, even though oil didn't do well in 2025. What should this government be doing right now? We have other resources, at this point. What do we do at this?
I think it's two things.
Is it too late?
It's not too late, right? On one hand, other extractive industries and then non-extractive industries. Other extractive industries is what you mentioned, gold and all, which are still generally subject to price shocks, external shocks. Right.
But it's been great for them in 2025.
Yes, global commodities. A lot of conversations have gone on as to the fact that the government estimated that in 2025 they made about 70-90 billion naira revenue from the extractive industries and from mining. But beyond the extractive industries, the potentials in the service sector, the potentials in agric, right, largely, the potentials in ICT, the potentials in real estate, the potentials in construction sector, right, and even on the energy sector side, right, our focus, shouldn't just be, extract and export, right? Dangote refinery is really helping. Every barrel that is produced in Nigeria or processed in Nigeria, I beg your pardon, right, saves us, some foreign exchange, right? And then same has to go for the mining sector too. We must look at extraction, beneficiation, right? Not just extraction to export.
So not just sending, copper and, most of these critical minerals out like that. Let's process them.
Exactly.
So if we focus on that, at this point, how long will it take for us to start benefiting?
Well, I mean, it's not going to be overnight, right? Developing the infrastructure to be able to do that, the systems to do that, definitely will take some time. Right. But beyond the extractive sectors, again, we need to invest. We need to create the enabling environment for the non-extractive sectors.
Right. All right. Let's talk about another huge elephant, at this point in your report. That's the poverty expectation for 2026. You did estimate about 34.7 million Nigerians are expected to face acute food insecurity, in 2026. You're expecting the poverty line to, increase further. About 140 million are going to be poor, according to your report, in 2026. I'm sure some people are saying, God forbid, not me and my family at this point. But how do we reverse that? We don't want poverty to increase in Nigeria.
I think, first of all, the report spoke a lot about too many things than the poverty level. But the IMF actually estimated 62% poverty level, right? We're just about 61%. So the increase is not that much. Right, and the reason is, of course, as we go forward, we are still facing challenges with household demands, as you know. But as we continue with the disinflationary trend, right, that should also ease a bit. So the increase is marginal. We're not going from 30% to 62%, or from 52% to 62%.
Okay.
Right, and then that could also moderate in the course of the year as the economy also grows and more jobs are created.
All right, definitely. We're not hoping for more poverty.
Yeah.
Thank you so much. It was great having you on the show. Akolawale Odualami is the Associate Director, PwC Nigeria. Thank you for helping us unpack this.
Thank you, Ladi. It's a pleasure to be here. Thank you.
All right, we'll take a quick break now. When we come back, we're talking artificial intelligence. That's a moment. Just stay with us. Now to our next conversation. Artificial intelligence is no longer a future concept. It's already reshaping how economies grow, how companies compete, and how people work. From healthcare to banking, education to agriculture, AI is redefining productivity across the world. Joining me now to unpack this, we have Mr. Ada Ojele, is the founder and CEO Agentus Inc. Agentus Inc. joining me right here in the studio. It's great to have you. Good morning.
Thank you, Ladi. Thanks for having me on the show.
Fantastic. So AI. I actually interacted with AI this morning.
Okay.
True confessions.
You should.
At this point. So it's everywhere.
Yes.
Now, how big is this AI revolution when you compare it to the internet and mobile revolution?
Oh, absolutely. Yeah. So I'd compare this to the 1920s when electricity was born, right? Well, these became mainstream, right? That's how big it is, right? So once in a century civilizational change. You're going to see a lot of very interesting things happen. Let me give you a use case, for instance, right? Ladi, you're giving me an interview today, right? You've given tons of interviews in the past, correct? Right? All of that data is out there online, right? In the future, you could actually have an avatar that looks exactly like you, giving me an interview while you're, sipping pina coladas in the Bahamas.
I hope I'm still making money there.
You are.
Okay.
And that's the fascinating thing, right? Because the value you've created has been the content that you have, lovely content, by the way, I love watching your show, that you created over the last, several years, right? And that's the world we're getting into, where basically it's not so much that AI replaces humans, it's basically this collaboration between human and machine.
Right. And definitely, I've seen that, play out so far. I've had to create, a couple of, slides.
Yes.
With AI, and it looks pretty good. It's nice.
And it's only going to get better, by the way.
Right.
We're barely at the early stages. If you want to compare this to the internet era, it's almost like we're in 1998. So the browser became available like 1994, 1995, the big browsers became available. The internet, by the way, had been brewing in ARPANET and the DOD and the United States Department of Defense, right? But 2022 was like our 1994. It's almost like we're in 2025, we're in 1998. Now imagine all of the internet that's been created since then. I mean, you didn't have Facebook until 10 years after 1994, 2004. You didn't have YouTube until 10 years after 1994. The big AI companies haven't even been born yet, right?
So are we like at the beginning or the middle, or are we nearing peak?
Oh, no, nowhere near peak.
Okay.
Nowhere near peak. The way to think of this really are 50-year cycles, right? So I've been working on AI since 2006, right? So this is where we are today, has been a 20-year journey to get to this place, right? So you have to think about it in that context. The internet around 1976 was born as ARPANET. 20 years later, you had the browser, and then we are where we are today at that peak. The peak of the AI era is 30 years out, right? So we're just really at the early stages of this.
Right, and talking about early stages, where is Nigeria in this AI race right now, in your opinion?
Yes. So this is a huge opportunity for Africa overall, Nigeria specifically. And if you want to be even more specific, this Lagos, Port Harcourt, Ibadan corridor, where you have a lot of top talent, right? What this means, and I've had teams in Silicon Valley, I've lived in the United States, over 3 decades, right? And I've had teams out of Silicon Valley. A software engineer, right, in Abeokuta with 2 to 3 years of experience will be able to perform as well as a software engineer with 10 years of experience in Silicon Valley because of AI, right? So those advantages are going to be lost. When you're talking about Nigeria and Africa, it's actually an upside in productivity, much more because we're starting from a low productivity base.
So how do we do it in a way where we're not just consuming, this technology?
Yes. Okay. Well, this is why I'm here, right? So I'm, being born in Nigeria and having connections to the land, we've actually committed ourselves to hiring AI engineers here in the country, right? And what that means is software engineers who use AI, digital marketers who use AI, right? And it's very important that we, and that means the governments and other players, private sector, encourage more and more individuals to go into this space. And let me give context from a GDP perspective. I think people talk about what it means to double the production of oil from, like, say, 1.5 million barrels to like 3 million barrels. The amount of investment it takes to do that, you can actually more quickly, double the $25 billion in the ICT sector to like 50 billion, right? Carving out parts of, IT services that go to India, perhaps. And India's got a huge share, about 275 billion, right? It's much faster for you to get a software engineer or a digital marketer to pick up those skills.
So just imagine a 40-year-old guy,
yes,
doesn't have any background in ICT.
Yes.
And he says, you know what?
Yes.
I want to learn about artificial intelligence.
Yes.
I want to be an artificial intelligence AI engineer.
Yes.
Is it possible?
Oh, absolutely. And in fact, this gets to a very important point around education, right? AI has become the educator, right? You can actually drive your own curriculum towards learning. The very thing you just mentioned right now is an AI prompt. You would just simply say, I want to be an AI engineer within the next, let's say, 12 months. Give me a very clean curriculum. Every day I will come here, I'll give you a prompt, and you should give me a section of things that I need to read, including links to videos, right? You don't have to go to university anymore, right? Because, what do universities have? They have, some sort of monopoly on professors, a monopoly on syllabi, right? Right. So you can absolutely learn as a 40-year-old. In fact, that's a great time to learn because you have a lot of experiences, right?
So how can, do we have AI startups?
Oh, yes.
Budding from this part of the country?
Yeah, I would put it this way. If you want to think of what an AI startup would look like, you would need to start thinking about how individuals can look at business processes right now, as I said, in enterprise, and then figure out how to use the technologies that are currently available, large language models, to build AI agents on top of that to address business needs. That's a perfect example. Of course, the scare there is that AI agents get created and people's jobs get lost, but that's really not what's going to happen, right? What's mostly going to happen is you're going to have much better productivity, right? You contact a hotel, you want to book a room, and it takes them a while perhaps to get back to you. Now you can get that in a second, right? That's obviously a good thing, right? So AI startups should and are already happening in the ecosystem. And the goal here is to not just compete to create resources or capabilities for the continent, but think the other way around. Bolt was built out of Estonia. Why can't an Uber for the world be built out of Nigeria? That's possible now because the capital advantages that others had aren't there as much anymore because you can use AI systems to scale much faster.
Right, and we've been talking a lot about the forecasts that poverty in Africa,
right,
Nigeria, there's a risk that it could rise.
Yes.
In 2026. Is it possible for artificial intelligence to help us break this gap?
Yeah. So the way to think of AI in the long term, and this requires, when I tell you, I started working on AI 2004, 2005, 6. We're constantly looking long-term vision, right? So let me take you then to that long-term vision. So there will be a future world where your tractors are AI-driven, right? They can operate 24/7 to make sure that the arable lands in Nigeria are properly farmed. And as you know, a lot of arable land is not being properly farmed, right? So you're going to have a period where these AI tractors or robots are expensive. And then over time, they'll start to become pre-used.
So we're talking physical AI.
We're talking physical AI, yes. So we're talking that for food. We're talking about that for education, right? So you could be in your village now and have, a device or a robot, again, looking at pre-used ones as they start coming in, that can teach a bunch of students in their local language, physics, chemistry, biology. That's all going to be possible. In the healthcare side of things, there's 1 doctor for every, 4 doctors for every 10,000 people in Nigeria. 4 for every 10,000. Right? But with AI, they're going to be able to scale, see more patients faster, have things that could be addressed by AI done much more quicker, where you call a number and the AI system is asking you for diagnosis and sending for your symptoms and sending you to places. So there's a huge advantage for those who are below the poverty line. Absolutely.
Fantastic. All right, we'll keep tracking this.
Absolutely.
At this point,
yes.
This is getting started. Thank you so much, Ada Ojile, the founder and CEO of Agentus Inc.
Yes.
Thanks for coming on today.
Thank you, Lottie. Thanks for having me, Michelle.
Fantastic.
Yep.
All right, so the Manufacturers Association of Nigeria say no Nigerian will pay more under the new tax law. Speaking at a special tax lecture in Lagos, MAN's Director General Segun Ajayi-Kadir explained that before the reforms, companies face more than 33 different taxes, levies, and charges from various government agencies. Take a listen.
Amidst questions and requests for clarity on the new tax law, January 9 Collective is holding a special lecture for its members and friends. They have also in attendance individuals who would be directly or indirectly affected.
The new tax law, recently signed by President Asiwaju Bola Ahmed Tinubu, GCFR, introduces significant reforms in revenue generation and administration. Its impact on businesses and our collective obligation will be a focal point of today's engagement.
The meeting is not unaware of controversies which have surrounded the new law.
Reforms such as these are necessary for progress, but they must be explained in simple terms, implemented with fairness, and felt in the daily lives of the people.
Despite the narratives and pushback circulating in the public discourse and social media, I encourage everyone here to embrace these reforms, ignore the noise, and focus on the opportunities this reform presents.
And this informs their choice of Chief Economist and partner at SPM Professionals, Dr. Paul Alaje, for the keynote.
Success depends on implementation and trust. We need to ask state government and federal government questions. We need to ask questions. For all revenue collected, how will they be spent? Where will you spend them? And what are you going to do with them?
Even when you are further clarifying the gray areas is the responsibility of the panel, beginning with exemptions of value-added tax.
While the law has exempted you from filing VAT returns, there's still a voluntary compulsion that you can do. If you decide, like the scenario that you mentioned, that you want to file, or if you have the inclination that I am going to reach 100 million, then by all means you can proceed to file.
The first thing I see is
some of the panelists still have concerns.
If there's no clarity, then there's a challenge.
This is a reform that we should continuously fine-tune to fit into our own circumstances. To the average Nigerian out there, once they hear the word reform, they want to run away.
However, manufacturers need no conviction on the benefits that the new law holds.
There is no manufacturer in Nigeria that is paying less than 63 taxes a year. It ranges between 63 to 120 in some states. So this tax law is a blessing to us because it brings it less than 10. And you can predict. One of the most terrible things for a manufacturer is to be unpredictable.
The conversation continues with the aim to balance different sides and perspectives and also address concerns of the impact of the new tax law.
All right, let's get a sense of what's playing out in the global space now. We have Ini with the fresh details. Brand new week and day.
Brand new week indeed, Gladys. Good morning.
Morning.
All right, good morning, everyone. Let's see what's happening in the global space. Starting with the expectation, global data expected this week. For today, we expect inflation number from India. That's for December. Obviously, on Tuesday, that's tomorrow, we'll be expecting those inflation numbers from the United States, the Consumer Price Index. Unemployment and wage growth will also be expected from the United Kingdom tomorrow. In Japan, the current account data and machine tool orders, and will give us a picture of what's going on in that Asian country. On Wednesday, China trade balance and the money supply, the MP2, is the data we're expecting, as well as from the United States, the retail sales, as well as the producers' price index. You know what producers are facing, the inflation around them. That's on Wednesday. On Thursday, we go back to the United States and then the UK, the monthly GDP data, Eurozone industrial production and trade balance figures. That's expected also on Thursday. And then Korea's central bank will meet for the MPC decision, interest rate decision. That's on Thursday. And we close the week in Malaysia, where we're expecting the GDP for the fourth quarter. That to be the preliminary report. So moving away from expectations now, we start from Europe, where there's an effort by Europe to stand up to China to retain local technology. And that's approaching, or seems to be approaching, a breaking point in a fight over a critical link in the global supply chain. Chipmaker Nexperia BV has wrested away from its Chinese owner by a Dutch court. And now one of the leaders in the legacy chips is racing to defend its independence. If that company is successful, Europe will hold on to valuable semiconductor manufacturing expertise and hand the region a rare victory over China. And of course, we know comes to chips and come to China, and that's a battle not just with Europe, but also with the United States. And talking about Chinese now, battery shares fell after Beijing unveiled a plan to reduce export tax rebates, while South Korea materials companies advanced. Contemporary Amperex technology company led the drop with a decline of as much as 4.8% in onshore trading today. Among the worst performers in the China index, its smaller pairs, including Eve Energy Company and Goshen High Tech, also slid more than 4% at one point. And then in Indonesia, there are plans to sell US dollar bonds. It's the first of such offering by an Asian sovereign this year, giving further impetus to a record start to global debt issuance by borrowers in 2026. And I hear global debt has hit another high. Well, Southeast Asia's largest economy started marketing fixed rate bonds with maturity of a little over 5 years, 10 years and 30 years, and that's according to sources and economists around that. They asked not to, they are talking about confidential information. That's how they've termed it at this time. Meanwhile, Indonesia's fiscal deficit is likely to widen by well beyond its legal limits this year as the government ramps up spending on its nationwide free meals program and the rebuilding of flood-hit provinces in Sumatra Island. And then Citi raised its budget deficit forecast to 3.5% of GDP in 2026 from an initial estimate of 2.6%, according to expectations from economists. Meanwhile, Malaysia and Indonesia blocked access to Elon Musk's artificial intelligence chatbot Grok over its ability to produce immoral, explicit deepfakes. That's what they call it. They say the tool on Musk's X platform allows users to generate images. In recent weeks, however, it's been used to edit images of real people to show them in revealing outfits. And the Southeast Asian country says that the platform could be used to produce pornographic and non-consensual images involving women and children. They are the first in the world to ban the AI tool by Elon Musk. Elon Musk had earlier said that the critics of his platform are just looking for any excuse for censorship.